spending time with George Mihalopoulos from Connected Finance again today, and I've got some really great questions around the real cost of your home loan. So the real cost, or the advertised interest rate versus the comparison rate, which I don't think people really understand. So there's many special advertised offers for home loans these days, George, and just want you to explain, if you can, how a customer chooses the best deal for themselves.
Yeah, look, it's a tricky one because, as you said, there's many offers available, and a lot of time the clients are purely just looking at interest rates. But really, before we go into interest rates in a lot of detail, clients really just need to look at what they're looking to achieve, what their goals are. Does the finance package actually suit their goals? Does it give them the flexibility they're after, or does it give them the security they're after? So there's a number of things they have to consider. The key thing that I'd suggest is they just need to speak to the right professional, get the right advice, to make sure they do the right thing for themselves in the short term as well as the long term.
Great advice. Now, when there's an advertised interest rate, we always see a comparison rate also advertised. Can you tell me what the comparison rate really is?
Yeah, again, a lot of clients are drawn simply to that very low rate, which is obviously the main kicker of the advertisement. The comparison rate is really the crucial rate clients should be referring to. The comparison rate is the all-up cost of the actual loan itself, of the rate itself. When I say the all-up cost, I mean it's the base rate, including the applicable fees and charges on the loan. So it could be monthly costs, it could be legal setup fees, it could be document fees, it could be external costs, it could be valuation fees, it could be yearly package fees. So there's a lot of things that actually make up a comparison rate. And ultimately, a very low interest rate doesn't actually mean a low comparison rate. We see a huge difference in the base rate versus comparison rate. So it's very important that a client considers what the true cost is of that actual loan and what the comparison rate is.
Great advice, because everybody gets lured by the lowest fee that they see, and without actually seeing what really goes on behind in the background,
Exactly,
I guess.
right.
Yeah. Now, if a customer didn't know the comparison rate and wanted to compare their loan to other lenders, what should they do?
Look, seek the right advice. Obviously, I can provide that advice. I can do a detailed product comparison. So really understanding, I've got obviously a particular software, and there's available software on the internet as well with regards to looking at comparison rates. But ultimately, the information I need to understand is the loan amount, the base rate, what the applicable costs are for that loan, setting up that loan, and also the ongoing costs. And with that information, I can really give them a good understanding of what the total costs are for the loan over the life of the loan, and essentially what is going to be the best loan for them. If they're comparing 2 lenders or 3 or up to 5 lenders, I can clearly highlight who has the better deal.
Absolutely. Now, George does have relationships with over 30 lenders, and it doesn't mean he's going to shop you around 30 lenders. It just means pretty much straight off the top of his head, he can actually do a comparison for you on probably your top 5 straight off. And I encourage you to let George do the legwork, because that's what his expertise is. So if you're looking to get the best interest rate and know that you're with the right lender, I'd contact George.
Excellent, thank you.